Hello and welcome to the business interview here on France 24. I'm Marcus Carlson. Should the European Union and its 27 members levy a financial transactions tax? Well, plans are underway for that kind of measure to impose a small charge on stocks and bonds trades. One of those who are pushing hard for this measure is Algirdas Šemeta. He's the European Commissioner for Taxation, and he joins me now here in the studio. Welcome to France 24 and hello.
Hello.
Tell us a little bit about why you're pushing for this tax. Why is this necessary from the European Commission's perspective?
There are a few reasons for this. First of all, I think that we all understand that our member states are in a difficult fiscal situation, and such a tax would allow to collect quite substantial amount of revenues. We also have to address issues of risky behavior of financial sector, and our proposal will allow to deal with the problems of high-frequency trading. And of course, also important point is that financial sector has to make a fair contribution to public finances, taking into account that member states, they have spent a lot of money in resolution of financial sector, more than 2.3 trillion euros of taxpayers' money.
So there are two reasons. One, basically get some money for your member states, and then second reason is to rein in the financial sector after a few very tumultuous weeks that we've had in both August and September.
Yes, exactly, and you know, we have to address issues which are related with risky behavior, and experts they recognize that high-frequency trading is one of the important sources of risk. And actually, financial transaction tax, even with a very small tax rate, would allow to address this issue.
What kind of tax rates are you looking at, and how much money is it going to raise, actually?
When preparing our proposals, we modulated various rates. Our initial estimates were made at the level of 0.1% for stocks and bonds and 0.01% to derivatives. At this level, the tax would allow to raise between 30 and 50 billion euro per year, depending whether currency spot transactions are included or not. But of course, now we are modulating before presenting the proposal, the rates. So exact rates will be known when the proposal will be tabled to the Council.
Now, you've just held some talks with the French President, Nicolas Sarkozy, right? And he's one of the people who are pushing hard for this tax alongside Angela Merkel, the German Chancellor. The problem won't be, though, to get other member states on side as well. For instance, Britain. Isn't Britain the number one stumbling block for the financial transaction tax?
First of all, I appreciate very much strong support from France and Germany to this tax, and I have to say that there are many other member states which are also very supportive to this tax. I think it's very important that general public in European Union is very supportive to the tax. 65% of European citizens are in favor to this tax. Of course, United Kingdom experts in United Kingdom and politicians say that such a tax, if introduced, should be introduced globally. By the way, we discussed with President Sarkozy the next meeting of G20, where President Sarkozy intends also to discuss with members of G20 about possible introduction of such tax at global level. So I think that European Union has to demonstrate and to lead by example, to table concrete proposals, and then to start also discussions at the global level.
Now, you're the European Commissioner, though, for taxation, so you're focusing on the European Union. On what kind of level are you looking at levying this tax? Is it the European Union level, 27 members, or is it the Eurozone, 17 members, just the 17 members that use the single currency?
Well, taking into account the mobility of financial sector, of course, the best solution would be to implement this tax at European level, at 27 countries level. And of course, our proposal will be for all 27.
But once again, isn't Britain going to put up a fight alongside some other members of the 27?
Well, I would not like to speculate now. Taxation is a very precise matter, and usually the substantive discussions, they start when the concrete proposal is tabled on the table of the Council. And of course, we intend also to discuss with our British colleagues. By the way, we all know that United Kingdom already has financial transaction tax.
But they don't want another one. That's the problem, isn't it?
It's in the narrower scope. But nevertheless, United Kingdom also has quite a high level of deficit, and additional revenues, I think, would be also important to United Kingdom. So we will continue our debate at EU27 level, and then on the basis of the results of this debate, we'll define our next steps.
What's your timetable here? When are you hoping that this will actually come into force?
Well, we will table the proposal very soon, in early October at the latest. Then, of course, we will have a meeting in Cannes or in November, G20 meeting. And we also discussed together with President Sarkozy that it's important to have a speedy process on this particular proposal, because our citizens and markets, they want results. They don't want a lot of discussions, but they want results. And I think it's in the common interest of our member states to deliver. So, well, of course, we have to understand that taxation requires unanimous agreement among our member states. So usually it takes time. So I hope that during the 2012 we will be able to address the major issues of this proposal.
Let's talk a little bit about the financial sector. A lot of people are saying that this financial transaction tax, if it's only applied to the European Union as a whole, then it wouldn't make much use, because it would only work to drive financial transactions away from financial centres such as London, such as Paris, and such as Frankfurt. What do you say about that criticism, that this will drive financial traders and financial transactions away from the EU?
Indeed, relocation is the major risk which we evaluated during preparatory stage, and I believe that we found a solution how to mitigate such a risk.
What is that solution?
First of all, as I already mentioned, the very broad tax base will not allow to circumvent the tax between various instruments. We also intend to propose very low, extremely low tax rates. And of course, relocation of transactions is linked with certain level of costs. So the tax rate will be very low, which will be not encouraging, let's say, to relocate. And we developed a very innovative system of definition of taxpayer. We intend to tax on the tax residence principle, which allows also capture the transactions even if they go beyond European Union.
But from a banking perspective, isn't this a really bad timing for European banks? There's talk of them needing recapitalization because of their exposure to Greek sovereign debt as well as to other peripheral debt. They're already being squeezed, the banks I'm talking about. they're not going to like this in any way, shape or form, are they?
I think that usually when there are proposals on taxation, those who are subject for tax, usually they don't like it. So I think that it's a normal reaction. But I think that we have to look at the facts. We all understand that member states, they paid a lot of money for bailouts of banks. 2.3 trillion euros, it's a lot of money, I think. We also have to take into account that financial sector is largely exempt from VAT. And this exemption allows them to save 18 billion euro per year.
But there's already complaints.
And of course, we also have to address issues of risky behavior. I think that everybody agrees that we have to deal with the risky behavior of financial sector, and this market-based instrument, namely financial transaction tax, it will allow to achieve this objective.
Very, very briefly, there's already complaints, though, that the banks, they're not lending enough money as it is. Don't you think that this could stifle lending even more?
Well, I think that lending activity is the core activity of financial sector and banks. When we talk about high frequency trading, so we all understand that this is a computer trading, very risky operations, and I think that taxation which will be imposed on this element of banking activity of the banks should not discourage them for lending and to making their core business.
All right, Algirdas Shemeta, it's been a pleasure to speak to you. Thanks very much indeed for speaking to us here at France 24. And with that, we're going to wrap up the program. Thanks for watching.